This video is a risk warning. If you don't want to experience significant drawdowns or losses around the middle of this year, I suggest you watch this video carefully. What I'm about to say might not be available on other financial blogs. I'll discuss some events that will happen in the coming period. Please watch these events in conjunction with each other to help you manage risk. What are these events? First, the World Cup opens on June 11th. Historically, the market has generally performed poorly during the World Cup. Second, SpaceX goes public on June 12th. The IPO of such a mega corporation creates a capital draining effect. So historically, the market has experienced significant volatility before and after such IPOs. Third, at 2 p.m. on June 17th, the Federal Reserve will announce its interest rate decision. Newly appointed Fed Chairman Warsh will speak for the first time in his capacity as Fed Chairman. Warsh's previous stance has been rapid balance sheet reduction plus interest rate cuts. Rapid balance sheet reduction aims to address high inflation in the U.S., while interest rate cuts aim to alleviate the debt repayment pressure on U.S. Treasury bonds. Therefore, the Fed's interest rate decision on June 18th is expected to involve quantitative tightening, QT, which is a negative factor. Many people may not understand the power of QT and may underestimate its negative impact. I will try to explain this to you in the simplest terms. The Fed's QT aims to curb domestic inflation in the United States. Besides QT, another way to curb inflation is by raising interest rates. Why did the Fed choose QT instead of raising interest rates this time? Because the interest rate on U.S. Treasury bonds is currently very high. If interest rates are raised, the interest rate on U.S. Treasury bonds will be even higher, which will increase the debt repayment pressure on the U.S. government. Therefore, Warsh chose to reduce inflation by tightening the balance sheet and then lowering interest rates to alleviate the debt repayment pressure on the U.S. government. Both QT and interest rate hikes aim to reduce the money supply in the market, but the essential difference is that QT reduces the monetary base while interest rate hikes reduce derived money. What is the difference between the monetary base and derived money? For example, if a country's reserve requirement ratio is 10%, how much derived money can $100 of monetary base generate at most? The answer is $900. Additionally, there is a concept called the money multiplier. The money multiplier equals 1 divided by the reserve requirement ratio. So if the reserve requirement ratio is 10%, then the money multiplier is 10. Multiplying the monetary base by the money multiplier gives you a broad money supply, M2. So this is monetary leverage. The money multiplier is the leverage ratio. Having understood the concept of monetary base and derived money, let's continue discussing balance sheet reduction and interest rate hikes. Interest rate hikes reduce derived money because they increase loan interest rates. Higher interest rates reduce the willingness to borrow, leading to fewer loans and fewer derived money created through lending. This reduces the total money supply and circulating currency, lowering asset prices and reducing inflation. Now let's talk about balance sheet reduction. Unlike interest rate hikes, balance sheet reduction reduces the total monetary base. With less monetary base, the derived money created by this base will collapse exponentially. This collapse essentially involves deleveraging. Therefore, the speed at which balance sheet reduction absorbs liquidity is much faster than interest rate hikes. Many investors are unaware of this. Now that we've explained this principle, let's look at what Warsh will do next. The Federal Reserve's balance sheet is currently $6.7 trillion, and the market expects Warsh to shrink it to $4 trillion within 2 years, a reduction of $2.7 trillion. Considering the U.S. money multiplier of 4.22, this translates to a contraction of 11.4 trillion in broad money supply within 2 years. Very alarming situation, far more severe than the rapid interest rate hikes of 2022 and 2023. You can look at the stock markets in the U.S., Japan, and South Korea before the Fed's first rate hike in March 2022, during that rapid rate hike cycle. Having discussed balance sheet reduction, let's look at SpaceX's earlier IPO. Previously, SpaceX's IPO was expected to be in late June or early July. Why was it initially scheduled for late June? Because Elon Musk's birthday is June 28th, and he has a habit of scheduling important life events around his birthday. For example, Tesla went public on June 29th, 2010. On June 28th, 2021, he officially announced his future Mars colonization plan and Starship core plans. On June 27th, 2022, Musk officially announced the $44 billion acquisition of Twitter. On June 28th, 2023, the brain-computer interface officially received FDA approval for clinical trials. And on June 27th, 2025, Tesla delivered its first batch of fully driverless Model Y vehicles globally. You can see Musk's personal habits from the timeline of these events. Normally, such a big event as SpaceX's IPO this year should have been scheduled around his birthday. Initially, the IPO was indeed set for the end of June, but it later moved up to June 12th. Why? You need to connect these events. Is it possible that Musk or other stakeholders in the SpaceX IPO knew something in advance? For example, is it possible that some capital shorted US stocks around the time of Warsh's first speech as chairman of the Federal Reserve? Of course, this is just speculation, but the fact that SpaceX's IPO was moved up is clearly unusual given Musk's personal habits. I can't say anything more, but this is my personal assessment of the risks, which I'm sharing with you.